The Great British Pound. Oh, price action looks very, very compact. It looks beautiful as well. We have got quite a few years here in price action, spanning from 2017 all the way to 2024. Many troughs and troughs, highs and lows, stops being taken. Most immediate one would be 1.14098. That's the most recent macro yearly sell side sweep, should I say. We ran it to 105, 200 for retracing and trading up into the equilibrium from the highs to the lows. Overall, this would be considered as a bear market. This is a bear market, okay? You got the highs there. Intermediate term low. Intermediate term high. Short term low. Sweep. Candle bodies. Short term low. Short term high. Lows. Run on buy stops. But we failed to get above this region here, which means that we've got a higher high, higher low, lower low, lower high, lower low, lower high. We're still in this range here, as we can see. Now, if we zoom into the last few, let's have a look at the last 2 years. From January 2022 going into 2023, we've pretty much been bearish. We've had a discount monthly order block that has not been met. Still has not been met yet. We've also got monthly sell side liquidity, which has not been taken. We have got the immediate swing high to swing low, which is the dealing range, high to low equilibrium, which has been met many times. Discount, we come to trade up into this area, premium, 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 but we still respect the equilibrium down at 1.23035. We trade up into the monthly fair value gap. This is the consequent encroachment, which is the median point of the fair value gap. This wick, which is the manipulation, failed to get up to the bearish order block. We sell off, shift in market structure. We sell off into a discount. Next month, October, we spike up into a premium, failed, traded lower, but closed within the prior month's trading. Before the next month, which is November, took monthly buy stops out, traded into a discount, and taken the September highs buy stops out as well, whilst also trading into a fair value gap. The lowest displacement fair value gap. Didn't close there, but we spiked there. Next candle, traded into the consequent encroachment before rolling over. 1, 2, 3, 4 bearish candles small bearish candles which retraced into the imbalance in price, which is in a discount, in a premium, because that's above the 50% Fibonacci from the dealing range high to the low. Traded into that area there. Also consider this area as an order block as well. Bearish hammered into that area, and this monthly's candle closed out bullish above the prior month's high, but failed to reach to the consequent encroachment. I do believe that there is a lot of stops there and there, which would allow price to run to 1.32. But at the same time, in saying that, if we were to break 1.23, 0.035, I'll be definitely looking at 1.20371, which is the lows, October 2023 lows, which is monthly sell side liquidity. Definitely will be looking at that area there. We haven't really done much in the past 5-6 months. We haven't really done that much. Just been trading in a small little range there. So let's quickly have a look at the 3 months time frame. Let's go back again. So having a look at the 6 months, whilst taking off all analysis, we can have a look at what's happened. (2007) highs, 2009 lows, 2016. Take those lows, so side liquidity. The goal would be to trade this area here, which we actually took. We actually took stops there. So we got an imbalance there that was filled. Before rolling over, creating a low. And this all happened between 2016 to now. So if we took sell side, is there a chance that buy stops is next? 1.42, 1.44? Because we've been short for quite some time. I mean, we've been short from 2014, really. Yeah, we've been range bound, but overall, man, my God, we've been short. Now, I'm not saying that to say, okay, we have to now turn around, because nothing has to happen, I'll be honest. This is all booked algorithmically, and there's someone in the back that's adjusting where price action should go when necessary. I do genuinely believe that. Nothing's what we think it is. We won't be talking about that on this channel. Well, just having a look at it, you can clearly see that the last 3 months has just been really stagnant. This month specifically, done nothing. It's done nothing. 6 months, bear in mind, right? Let's have a look at the 3 months time frame. Sold off, order block, traded above, respected right there. So I'm using my crosshairs to actually look at price action. Respected, traded above, not an inside candle because stops were taken. Not an inside candle because stops were taken, but we closed above the upper region of that bullish candle here that was created in October. January come, April's here, took stops. Stops were taken. What's next? Buy stops. 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 If no high was created there, we've got the low. And we've also got an order block. So if we were to continue to trade higher, 1.38 is where I'm looking at. If we're looking at long-term projection on the 3 month time frame, going into the monthly now. Let's look at how everything's panned out. But we'll start from when we sold off. sold off, bullish candle. Didn't take the highs, but we did trade higher than the open of this candle. It's nothing really that major, but it's something. Next candle came in, buy stops taken, buy stops. Didn't get to that region there, but that would be the next target, which that month would have done there, taken buy stops, order block, traded there for some time, retraced back into this imbalance, breakaway gap, this candle there, shifting market structure, we trade into the down close candle in this upwards movement, continue to trickle higher. We obviously trade into the order block as well, deep into the order block. This breaks that, negates that, trades into this imbalance in price as well. We have a look at the upper displacement in price, which this bullish shooting star gets to. Next monthly candle rejects it. Sell side is taken, buy stops, nothing really that major, no manipulation to the upside. We sell off for a fairly big month within this whole region here. Big capitulation in September. October we come in, settled down, didn't really do that much, didn't really get to trade to that breakaway gap that we did in January, February and March. We came right back up, still trading within this region, but then this November candle took buy stops. Whilst the December, January, February, we didn't do that much. March, April, just trickling down. No stops were taken apart from May. May was really the time that stops ran on. And if you get something like that, you'd expect a sharp sell-off going to 120 at least, or at least going back down to the lowest displacement, which in this case would be 1.23374. Never got that. This current month now has closed above the previous month. Bear in mind that we closed there, now we're trading above there. Next point of interest would be 1.28938 and 1.31424. If we were to have a sharp movement to the upside, to the downside, I'll be looking at the lows of 1.20371 and 1.18021. Having a look at the weekly time frame, now I'm going to turn back on my analysis. You can see the artistry. I've chopped up these charts. You can see a weekly bullish order block. This is the weekly time frame now. Price action has respected this for many weeks. We sold off, didn't really shift. We didn't have a shift in market structure, so we tested it one more time. We had a candle body closure above that region, but we sharply rejected, selling off. Then we had a shift in market structure with the fair value gap being mapped out there. Sell side liquidity is taken, and this is on a macro scale, right? So before we even continue to break it down, just to let you know that this, bear in mind that this 50% equilibrium, 1.23035, is from the highs to the lows. As mentioned before. So what we're now having a look at is the weekly time frame and how the price pretty much plays around with the equilibrium between discount and premium raise. So anything below, so let's go back and have a look at the dealing range A, B. So it's when it pulls back up. Bear in mind that we are in a bear market. We want to be selling in a premium. So let's zoom back in. So we finally trade into a premium there. We get into a premium. We continue to trade in a premium. briefly trade into a discount before taking off. You've been in a discount more time than we've been in a. We've been in a premium more time than we've been in a discount. Whether that's gonna keep up, it's only a matter of time. I don't know what it is with sweets, man. I'm just stop this shit. Oh my god, you got nice. Sorry, I had to flip the charts to see if I was seeing anything different. So yeah, I'm looking at these highs and these lows if we are to break, because right now we've been bullish for the past 3 weeks. With this week taking buy stops, failing to take sell stops in a monthly fair value gap inside of an order block, weekly order block, which is nearby the consequent encroachment, which is also on a premium. I'd need a bit more intel. I'd need to see either a break of the lower fair value gap or highs being run on, but this is where intraday analysis comes involved. This is where reaps rewards. Very, very, very sticky, man. We've got imbalance there, the daily imbalance, which has been respected throughout numerous of days. So I could expect the consequent encroachment to be hit, with first area of importance being 1.28, then 1.28334, then 1.28938. To the downside, I like to see 1.26479, and we'll be looking at the lows there, but we'll get there as price action dictates what happens. Yeah, with that being said, blessings.